Have you ever wondered why so many traders fail, even after spending years learning charts, indicators, and strategies? The truth is, trading isn't just about numbers, it's about survival. Every profitable trader, no matter how experienced, goes through what I like to call the three brutal stages that test not only their skill, but their mindset, patience, and emotional endurance. The first of these stages is the excitement and overconfidence stage. When a new trader starts seeing small wins, there's an almost euphoric feeling, like they've discovered the secret to easy money. Every trade seems like a jackpot waiting to happen, and it's easy to forget that the market doesn't care about your ego. At this stage, the danger is taking trades without proper risk management, over-leveraging positions, or blindly following hot tips because it feels like you're unstoppable. Many traders make the mistake of thinking that their initial success guarantees future profits, which is a trap that can wipe out months of gains in a single day. Emotional highs make them reckless, and losses feel like personal failures rather than part of the game. The harsh lesson here is that early success is deceptive, and surviving this stage requires humility, discipline, and the mental strength to stick to your strategy even when every instinct tells you to go big. Traders who fail to control this excitement often skip learning critical skills like risk management, journaling trades, and developing a clear trading plan, skills that are the foundation for surviving the brutal stages ahead. It's not enough to just know the charts. The first stage teaches you that emotional control is more valuable than any indicator. Only when a trader accepts that losses are inevitable, that the market is bigger than their ego, and that strategy must trump impulse, can they hope to move to the next stage. And believe me, the next stage is even tougher, because it challenges everything you think you know about yourself as a trader. The second brutal stage every trader must face is the painful reality stage. This is where early excitement crashes hard against the unrelenting reality of the market. No matter how much you've studied or practiced, losses start piling up, sometimes without warning. This stage is brutal because it doesn't just test your account balance, it tests your mindset, confidence, and emotional resilience. Traders begin to question their abilities, second-guess every decision, and feel like giving up entirely. It's not uncommon to see traders obsess over every chart pattern, every news headline, every minor market fluctuation, hoping it will validate their choices. The truth is, the market is indifferent, and trying to control it only magnifies frustration. During this stage, fear and doubt creep in, forcing many to abandon strategies they once trusted, or to double down recklessly in an attempt to recover losses fast. The hardest lesson here is that losing is part of trading, and your job is not to avoid it entirely, but to survive it with discipline and structure. Those who persevere start to understand that success doesn't come from chasing profits or predicting the market perfectly. It comes from consistently applying risk management, learning from mistakes, and building habits that protect both capital and mental health. Surviving this stage is about patience, humility, and emotional resilience. Traders who make it through begin to see losses as data points, not disasters, and that perspective is what separates the amateurs from the professionals. Once a trader survives the painful reality stage, they enter the mental burnout stage. This stage is less about losing money and more about the psychological weight of constant decision-making, discipline, and market uncertainty. Even profitable traders can feel exhausted, overwhelmed, or mentally drained because the stakes never stop. Every trade, every strategy, every news update demands focus, and the pressure to maintain consistent results can lead to stress, anxiety, and decision fatigue. Many traders find themselves making impulsive moves simply because their mind is tired, where they start doubting strategies that were working perfectly. During this stage, the challenge is learning to pace yourself, manage stress, and maintain clarity even when your mind is exhausted. This is also the stage where emotional intelligence becomes critical. You have to recognize when to step back, take breaks, and protect your mental energy, because trading while burned out can undo years of progress. Those who fail here often give up prematurely or make mistakes that could have been avoided with proper mental management. On the other hand, traders who master this stage realize that consistency beats intensity and that long-term success depends on balancing focus, rest, and emotional well-being.
The fourth stage is the overconfidence trap stage. It might sound familiar after the first stage, but this one is subtler and much more dangerous. After surviving losses, enduring burnout, and finally seeing some consistent profits, traders can fall into a silent trap of overconfidence. This is when small wins convince them they've figured it out, and they begin to take larger risks, ignore their rules, or become complacent in strategy execution. Overconfidence at this stage is insidious because it feels justified. After all, they've survived the hard parts, right? But the market has a way of humbling even the most seasoned trader, and a single mistake or unexpected market move can wipe out months of gains. The lesson here is that humility is as important as skill. Even the most successful traders must constantly question themselves, refine their methods, and respect the unpredictable nature of the market. Those who understand this stage learn that trading is a lifelong game of learning, adapting, and controlling risk, not a sprint to prove their intelligence or luck. The fifth brutal stage is the emotional detachment stage. By this point, traders who survive the previous stages begin to understand that attachment to individual trades or short-term outcomes is a recipe for disaster. Emotional detachment doesn't mean cold or robotic trading. It means making decisions based on strategy and logic rather than hope, fear, or greed. In this stage, traders develop the ability to let go of losing trades without panic, take profits without euphoria, and view the market as an ecosystem that is bigger than any single trade. This stage is transformative because it shifts the focus from chasing validation or ego to following a process that works over the long term. Emotional detachment is what allows traders to remain disciplined during volatility, resist the temptation to revenge trade, and execute strategies consistently regardless of market noise. It's a mental maturity that almost all beginners lack, and it's the difference between surviving in trading and truly thriving. The sixth stage is the mastery through adaptation stage. Here, the trader has survived losses, burnout, overconfidence, and emotional turbulence, and they begin to see the market in a new light. Mastery doesn't mean perfection, it means flexible and adapting to changing conditions without losing composure. Markets evolve, new patterns emerge, and economic shifts happen unexpectedly. The trader who reaches this stage is constantly learning, refining strategies, and evolving with the environment. This stage is about thinking like the market rather than trying to fight it, understanding probability, and knowing that risk management is just as important as strategy. Traders at this stage can make decisions calmly, even under pressure, because they've internalized the lessons from every previous brutal stage. They understand that survival and profitability are about the long game, not short-term wins, and that every setback is an opportunity to improve. The seventh stage is the legacy and consistency stage. This is where trading stops being just about personal gain and becomes a disciplined, almost professional practice. Profitable traders at this stage are no longer reactive. They follow systems, maintain meticulous records, and execute strategies with precision. They have learned that trading is not about chasing dreams of quick riches, but about building sustainable growth and protecting their capital. Consistency becomes their superpower. They no longer seek adrenaline from wins or despair from losses. Instead, they focus on process, improvement, and strategy refinement. This stage also involves mentorship, sharing knowledge, and learning from other experienced traders. The brutal part of this stage isn't financial, it's psychological, because maintaining this high level of discipline over years requires constant vigilance and self-awareness. Only those who can consistently execute without succumbing to ego, fear, or greed truly thrive. Finally, the eighth stage is the peace with uncertainty stage. This is the ultimate stage every trader dreams of reaching, where they accept that the market is unpredictable, losses are inevitable, and control is an illusion. Traders at this stage make decisions calmly, without anxiety or excitement dictating their actions. They treat trading as a probabilistic game, understanding that even the best strategies will occasionally fail. The focus is on process, risk control, and continuous learning. Here, trading stops being a battle with the market and becomes a collaboration with probability, discipline, and patience. Those who reach this stage experience true freedom. They trade with confidence, control, and clarity without being ruled by fear, greed, or emotion. And this is the stage that separates professional traders from everyone else, where profit, longevity, and mental peace coexist. Surviving all these brutal stages isn't easy, but every trader who does emerges stronger, wiser, and genuinely profitable.